I've read this and I read all kinds of academic papers. I showed you guys before, like a lot of the papers I read, but this is something that is consistent in all those papers, right? It says, furthermore, rising asset prices have become an important driver of racial wealth inequality in recent decades. The average white household holds a significant share of their wealth in equity and has therefore benefited from booming stock prices, while the average black household, for whom housing continues to be the most important asset, has been largely left out of these gains. We did a podcast recently, and that article that we were referencing in the podcast mentioned this too, as
Yeah.
it was talking about how black wealth has actually increased through the pandemic, but it still is lagging in certain areas because now I know a lot of the folks that are watching this doesn't really apply to you guys, but as an overall whole, our folks do not invest in the stock market.
It's been getting better, but it ain't where it gotta be, where it need to be.
Statistically speaking, we do not invest in the stock market. Like so, and again, this is not an anti-real estate thing. Real estate is my life. I make a living through real estate, right? So that's not what I'm saying. Um, but what it's saying is we avoid equities, and that has been problematic, right? So there's all kinds of other issues. As you can see, this is a long paper. So it gets into how policy has held us back as well. So we're not ignoring all those things. We're not ignoring Jim Crow. We're not ignoring the result.
Redlining, we not a
No, I'm not ignoring that. But those of us that have started to accumulate assets, the data shows most of us still drift towards real estate. And over a long period of time, stocks outperform real estate, right? So I started doing like my own math. I was looking at something else. I said, all right, so I'm gonna look back to one of my best real estate investment assets, right? So I have a property in 19120, which is Almy. I bought the property in 2002. I paid like 69K for it. The appraisal just came in at like 245. That's amazing, right? 69K, 245.
It's 152, like 100, almost 200K.
Almost 200K, right? So, and I was sitting down, I was talking to my wife about this. I was like, so after I read this article, I said, so let's think back. When I bought that house, I think out of pocket, I came out with like, 10 grand, let's say the mortgage, whatever it was per month. I plugged those same numbers in the S&P 500, right? Now, remember, I told you what it's worth now, like a little less than 250. So let's just give it 250 to make the math easy. So from 2002 to 2023, and it's a tenant there. I have a $250,000 asset.
Okay.
Right? Now, stay with me. I'm making the math easy. That's one of my best real estate. I mean, I made a lot of purchases, but I'm using this one because it's a long period. I did the math and I was like, all right, take the same number that I used for a down payment. If I put that into the S&P 500 in 2002 and the same number that I paid every month, like towards this mortgage, whether it was me or the tenant, what do you think the number would be right now, Core?
Probably about 3 million.
Not that high.
2 million.
It's a little less than that too.
1.3 million.
Close, right? Like 1.2 over the same time frame. So you're talking about a difference from 2002.
You're talking about $1 million.
$1 million.
You're talking about $1 million.